All right, guys, back to work tonight. FOMC is behind us. Earnings have been posted, and we have a wide open session tomorrow. Reaction Thursday, the Thursday after FOMC, one of my favorite trading days of the month. Markets are range bound after Powell's announcement this afternoon. You know, that makes me happy. I love range bound markets, and you probably will too once you learn the right strategy. One of the easiest types of markets to trade are range bound markets. And of course, tonight, I'm going to go over my favorite trades to help you capitalize, make some moolah on these range-bound markets for tomorrow. Now, before we jump in and talk about my favorite trades for tomorrow, make sure you subscribe to our channel that way you don't miss tomorrow night's video. And if you enjoy these videos tonight, do me a favor, as always, hit that like button for me. Give me a shout out down in the comments section. Thank you so much for tuning in, supporting the YouTube channel. But enough of the intro. Let's get ready for Reaction Thursday. Boy, again, one of my favorite times to trade is that day after Powell comes out, right, and shakes the markets up. Now, starting off tonight on the 60-minute time frame on the S&P and SPY, the Nasdaq and the QQQs, I like to use a 60-minute chart to give me a bigger picture, but more importantly, help me plan the best trades for the following day. And then later on in the video tonight, I'm going to drill down to some tick charts, some faster time frames, because the tick charts make it easier to time the best entries. So we'll plan first in the 60-minute, and then later on tonight on the video, we'll drill down to our tick charts, and we'll talk about some specific entry tactics I'll be looking for tomorrow in our trade room. Now, on the 60-minute, bunch of ranges, right? Bunch of ranges. Get a range on the S&P, get a range on the Nasdaq, but you'll notice they are quite different, right? It's a bullish trading range on the S&P and the SPY. It's a bearish trading range on the Nasdaq and the QQQs. The most important thing that you have to understand about ranges is that ranges are magnets, and so the actual middle of that range becomes a magnet. And ultimately, price will want to rotate back and forth, back and forth. So the two key components about ranges is we want to, of course, sell highs and buy low. We call that trade the edges in our trade room, right? So buy low, sell high, trade the edges, and use that range as a magnet. And then, believe it or not, there's quite some easy trading to do, trading that rotation back and forth. There's one specific type of entry pattern we like to use whenever we have the market rotating back and forth. Again, buyers will buy low, sellers will sell high, and the wise traders will trade rotation, right? Rotation back and forth. So we'll talk about how to buy low, how to sell high, how to trade rotation. There'll be a lot of traps. There'll be a bunch of range reversals. And, you know, we're in earnings season right now. Markets are quite unpredictable right now. We will definitely talk about some breakouts. I got some great breakout setups I'm tracking, going lower on the Nasdaq, going higher on the S&P. So we're going to cover all the bases. By the time we're done tonight, you will have a roadmap to make some money no matter what these crazy markets throw at us here on Reaction Thursday. Now, before we jump in and go to detail about these trades for tomorrow, let's double check the calendar for tomorrow, because there are three things that you want to be aware of. First of all, tomorrow being a Thursday, 8:30 Eastern time. You'll notice right away, right? Big block of news. Yeah, don't worry about the jobless claims. Don't worry about the international trade, GDP, durable goods. Those are two headline numbers. Those will be the market catalysts for us tomorrow. So be aware of that. 8:30 Eastern time, a very significant market catalyst at 8:30. Now, second thing you want to be aware of is not overnight for me here in Los Angeles, but we have the ECB announcement tomorrow morning that usually comes out between 7 o'clock and 7:30 Eastern time. The ECB, just like the FOMC this afternoon, right? They're going to probably raise rates. In Europe, they haven't been as successful at getting inflation under control in Europe, so it'll be interesting to see what they say tomorrow morning. We do anticipate them to kind of mirror what the FOMC did this afternoon, but be aware of that, right? Tomorrow morning, again, usually around 7 o'clock to 7:30 Eastern time, we'll get the announcement, and then just like this afternoon, there'll be a press conference. So just be aware of that tomorrow. If markets are getting squirrely in the pre-market tomorrow, you know what's going on. They're reacting to that ECB announcement. The third thing on our radar for tomorrow is we do have kind of a wide open day tomorrow. There isn't a lot of big earnings coming out in the morning. Tomorrow afternoon, we're going to hear about we'll hear from Ford and Intel. Those are the ones that I think have the most potential to move these markets into the close tomorrow. So be aware of that. But really, at this point, we've got most of the big names. Again, Intel Semiconductors, Ford with their big EV division they gambled on this last quarter. So there's a lot of potential there tomorrow. But really now, for the most part, most traders are shifting their focus to next week with the big Apple, right, the behemoth, next Thursday. So we're almost out of the woods here when it comes to earnings. But just, be aware. Be careful around the edges of the session, early in the morning, late in the afternoon. And, like I said, like I've been saying all week this week, whenever we go into earnings season, we have to be prepared for pretty much anything, right? The markets love to throw curveballs at us during earnings season. We'll also do our best tonight, get our game plan put together, but obviously tomorrow morning in our trade room, we'll kind of roll with the punches and we'll make adjustments on the fly if we need to. Okay, let's get back to our charts though. Those are the three things we want to keep in mind for tomorrow. Back to our charts though, because of course, the money is made on the charts. Let's go through my favorite trades here for tomorrow. The S&P Inspire we'll start with first, and then we'll wrap up tonight on the Nasdaq and the QQQs. Now, like I mentioned earlier, the S&P right now, of course, is bullish into a trading range. And ultimately right now, we have what's called a rotation off the high. We're coming in off the high of it, and we anticipate this market will want to rotate as it goes lower and try to take out some of these key levels of support. Now, once it reaches the low of that trading range, because of the overall bullishness, we do anticipate buyers to step in and rotate this thing back higher. And we keep kind of playing that, right, that dance, right, back and forth. And again, bears are looking for shorts on the way down. Bulls are looking for longs on the way back up. And again, like I mentioned earlier, this is a bullish market into a trading range. So I do want to talk about breakouts, right? Because earnings season, ECB tomorrow morning, big news, durable goods, GDP. So I do want to talk about breakouts as well. We're going to cover that in more detail. So that's the general idea, right? Market should be rotating now off of that low. Off the high. Let's go down onto our tick charts now. Remember, I like to use tick charts in my trade room because it makes everything easier, especially makes entry patterns easier. This is a 7,000 tick chart. You can always see the time frames in the upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA, the exponential moving average. Now, what is this tick chart telling us right now? Well, you can probably see something pretty similar, right? It's the opposite direction. It's bearish into a trading range. Now, you guys are learning this in my video classes, right? In my free trading course, I talk a lot about range-bound markets and how much I love them and why you should love them too. They love to rotate, right? They love to rotate back and forth. So right now, we assume these bears are trying to finish off this rotation. You'll notice I've marked up the amount above the range and below the range, a little channel down, a little trend line down there. So it looks like the bears are trying to take out these lows. There definitely is ways that sellers can short this thing on the way down. In my free trading classes, I talk a lot about traps, right? Trap setups are one of my favorite setups. That would be the way you trade this on the way down, right? So as we roll going lower here, it's all about, this would be a bull trap. Now, see how I draw this? Traps are very specific. You want to see a lower low in price, and then the swing high between those lows, that's where you want the entry signal. I talk a lot about those entry signals in our free trading classes, right? Which by the way, if you haven't taken that free class yet and learned these setups, what I'll do is I'll put a link up here because I'll be talking a lot more about these patterns, and I want to make sure you know these setups. If you're not making consistent money right now, grab that link I'll put up there for our free trading classes, because the strategy you'll learn in that video series will teach you a simple trick we use every morning in our trade room to know exactly where the best winning trades are going to be that day. And most importantly, you'll learn my favorite entry patterns like traps, of course, failure patterns, pullback combinations, strength trades. So if you're not getting the results you want right now, or if you want to make more money, definitely grab that link up top there. And don't forget, I'll put all the important links, everything we talk about tonight, I'll put all those in the description of the video there as well, in case you can't get that pop-up. Okay, so now that you know where to get more information on these, I want you to learn these setups because they will definitely change the way you look at trading. So on the way lower, it's bull traps, right? On the way lower, it's bull traps, and that's a pretty easy aspect about it. Now, as we get down around these lows, I'm always talking about this in these videos. Remember those two questions, location and momentum? This becomes a great place to be a buyer. But what's the problem though? The problem is as we rotate off the high, this will be a lot of bearish momentum. I'm not a huge fan of picking the bottom, right? Picking bottoms can be very, very difficult because you never know, right? It may just keep on going and going and going. In fact, sometimes what happens is, a lot of times what happens is when it rolls off the high of that range, it just keeps on going and we end up getting what's called a breakout pullback. Right? A breakout pullback. So ultimately, as it rolls off of that high, momentum builds and builds and builds and just becomes a steamroller. And then all of that momentum, we oftentimes get a breakout pullback. We can short that as well. So the moral of the story is I don't want to pick that bottom right there, right? I'm not in the business of trying to pick that bottom because it may easily keep going lower here. So how would you know when it's time to buy off of that low? Well, again, if we do end up all the way down at those lows, now we need to anticipate that with all that momentum, we're probably going to try to keep on going. And this is where we're going to use what I call a failure setup, right? It's one of my favorite patterns. You guys are learning this in that free video series I mentioned earlier. Now, because momentum is so strong in this situation, we want to use what's called a two-try failure. This is really, really simple. As we test, right, as we take out pendulum, support level, below that trading range, we then wait and see what the bears do. We don't try to pick the bottom. We let the sellers kind of dig their own grave, right? We let them show their cards. We let them spend all their bullets, whatever metaphor you want to use on that. But once those bears, right, once they commit a couple times, now I know, even though we have all of that momentum going lower, now we know where their stops are. Remember, the easiest way to make money in a range bound market is to wait for a breakout. We talk about this in the free course, right? Wait for a breakout. Let the breakout sellers get trapped, right, at support below the range, and then use their stops for a run back higher. Oftentimes what happens is this will pop higher. This will pop higher, and you can grab that first pullback as we make that. Remember, the market wants to rotate, right? It'll want to rotate back and forth. So as it starts to rotate back up again, we can use what's called a failure into pullback combination. You can see an example right here. Right, that's a great example right there. We take out that low, we're into support. Look what happens. We roll lower, the bears try, what happens? They squeeze back up. There's your failure. They pull back. There's your failure into pullback combination. So very simple pattern, right? Just don't try to pick the bottom on this, right? So as we go lower, 1, 2, trap those bears in, and we're trying to go back up into that trading range. Now, guys, later on in the video, I'm going to talk about a slightly different variation if we want to short off the high. All right. Remember, we're overall bullish right now. Okay, so there'll be a slightly different variation of that to short off the high. I'm going to circle back to that, and we'll talk more about that a little bit later on in the video. Let's now talk about what if this thing rolls over and just runs, right? What if it really makes that really strong breakout going lower? Good question. Well, if we end up rolling all the way down, I've got some big targets down here around that 45, 57, 45, 56. If we get that really strong run down, what we now start doing is all of the support levels now basically become levels of resistance, right? So 73 3/4, all of these prior swings, it ultimately becomes one big wall, if you will, right? One big wall. If I can grab this rectangle, right? Think about like one big wall, right, of resistance right there. So if we go lower, what you want to start thinking about is thinking about how can I start using those prior levels of resistance now, or prior support as resistance now, get back up. And guys, what will almost always happen is this will bounce. It'll eventually bounce, right? Eventually it'll bounce. Eventually the bears will take their profit. Eventually be enough buyers down here. Eventually it will bounce. What happens oftentimes though is it will get just a little bit above the 21 moving average. Okay, what'll happen is, right, it'll run lower, it'll bounce hard, and then what'll happen is a lot of buyers will come in and they'll try to buy that reversal. But you have to remember, whenever we have a lot of momentum like that, right, there's a good chance we're going to roll over and retest that low. Anytime we see a strong move down like this, we have to expect the bears to want to pull back, short, and retest low. The moral of the story, the point I want to make here, though, is if we can catch those buyers trying to get long, we can use a failure setup to short right back down and take out that low. Then once the retest is made, in our trade room we call this mission accomplished. Strong run down, pull back, retest that low. Once we get a retest of that low, then we can use that same two-try failure, that 1, that 2, and trap those bears in, and now make a run back up into that trading range. If you really want to get good at this, if we really rip and make that run lower, could you buy it down here? You could, but you have to use a slightly more advanced reversal setup. It's called a crown reversal. It looks like this. 1 try for the bears, higher high, higher high. 2 try for the bears, bear trap, and in from there. What this does is this blends together 2 of the 4 entry patterns you guys are learning in the free trading class, right? Failures and traps. Okay, now this is the way you trade it if it really rips, right? If it really, really rolls over and buries this thing going lower. And then again, remember, we're not gonna abandon the breakout pullback. We're gonna mark up some of these prior swings here, get back above the moving average, get those buyers to come in and let them foolishly buy into, remember, all that momentum, and then we look for that run back down. Okay, if you're really good at this, grab that crown reversal. A lot of new people, a lot of new traders, right, they won't get the crown reversal. What they'll do is they'll wait for that pop and they'll short it right back to retest the low. Once they take out that low, mission accomplished. Remember, we're still overall bullish. That's still a range up there. Now all of that momentum now has been absorbed now by the bears. All the sellers who shorted that pullback, they're taking profit down here. And this is exactly where we can now go in, trap the rookies in, because that's the only trader who's selling down there. That's the only trader who's shorting into that area is a rookie. Right? Nobody else, professionals are not going to short down there, right? So once those rookies get short, now we know where their pain is, right? Rookies love to use tight stops. They can't defend themselves, right? And we can punch this thing right back in. So this is a scenario I'm certainly being prepared for here for tomorrow. Now you know, right? Again, crown reversal into that breakout pullback, retest of that low, right? And then that 2-try failure to, again, punch us now back up into that trading range. Okay, so now you know kind of my game plan, right? If we end up rolling over, and how in which we can buy it off the low, and how to sell that breakout pullback, right? If we do end up really, really collapsing. Now, what if we go higher here, right? What if we go higher? How would I sell off the high? Right? And let's talk about this, because I want to make sure we're ready for a short off the high. I also want to talk more about a breakout going higher, right? Because breakouts are a part of range trading, right? Now, we never trust a breakout, as you guys know, right? We don't trust breakouts. We trade against breakouts. But at what point does a breakout become a breakout, right? When do we trade the breakout? Okay, let's talk about the Nasdaq now. Now, the Nasdaq is, as you can see, it's almost identical, but it's quite different, right? It's a bearish market into a trading range. And of course, right now, you've got this thing rotating back and forth here, right? Back and forth. The way you make money in a range bond market is you pick your spots wisely. You buy low, you sell high, and you trade that rotation, like I'd mentioned on the S&P, right? What was that pattern again? The pattern was, well, let's go to the tick charts. Let's go to the tick charts now, right? So go to the tick charts now. The tick charts, I think, are easier to get entry patterns. Tick charts are superior to time charts because the way they look, they make pattern recognition a hell of a lot easier. Now, this looks pretty familiar, right? Bear move into a trading range. We are rotating back and forth. And again, earnings season is upon us, right? We got a lot going on right now. So what should happen, all things equal, is we should end up rolling back down as we go. And remind me again, as the market rolls back lower, what was the best entry? Yes, it was going to be a bear trap, right? A bull trap off that high, right? Above that high there, lower in price. And then now, so here's a really good example now. So on the Nasdaq, if we end up around these lows now, remember, we're pretty bearish overall, right? We're pretty bearish overall. So if we roll over here, this is definitely where one of those crown reversal patterns will certainly be the one that I'll be looking for here tomorrow, right? So one try for the bears, two try for the bears, and then trying to get that, right, that bear trap in this case off of that low. And again, you'll notice triangle support, major support, pendulum support, really anywhere, right? Anywhere in this area. And again, if we were to roll and really roll over, now all these levels, right, become great spots for pop it up, get above that 21 moving average, let the buyers try, right? It'll look a lot like that, right? It'll pop up, buyers will try, and you can short that sucker right back down to retest the low. So not a lot is different on the Nasdaq except the momentum, right? Momentum is a lot more bearish in the short term right now on the NQ. So if we end up rolling over here, right, and ending up down around these lows now, I really got to be a little more patient with the crown reversal pattern, right, to get that pop coming in off of that low, or that double bottom pattern, right, that run over, right, and then 1, 2, and then back up from there. So the little subtle difference there on the Nasdaq. Now going higher, okay, going higher here. How could I short this, right? What would be the best way to short this? Well, let's take a step back for a second on the 60-minute, because one of the most challenging parts about the Nasdaq right now is this guy right there, right? That is a very, very strong run higher. Anytime we see a strong move in one direction, we know it's usually only a matter of time before they go back and retest that level. So would it totally surprise me? We've been talking about this quite a bit on these videos. We might be bearish into a range right now, but we all kind of have a feeling that eventually, once we get through some of these big earnings, once we get FOMC out of the way, once we kind of get all this stuff off our back, it does seem inevitable that eventually this market will wind up making its way back up to take out those highs. Will it be tomorrow? I don't know. It's tough to tell with Apple's big earnings still lingering out there in next week's land, right? So the bottom line is, if we do end up running higher here, I have to be aware that breakout going higher could certainly be something that happen tomorrow, right? Tomorrow's reaction Thursday. Tomorrow we have kind of a bit of wide open space, right? There's not a lot of big headlines that would apply to the Nasdaq until we get intel, right, tomorrow afternoon. So tomorrow could be the day when we get this range, they finally break out. Now, again, we never trust breakouts, right? We always look to fade this thing. So if we go higher here right now, what do you think is the best way to short this thing? And this would also apply to the S&P as well. This is where one of those failure patterns, but again, those two try failures. Now, when it comes to this specific situation, what I've been looking for is that 1, that 2, and that bull trap, right? We call these crown reversal patterns, right, off of that high. Until I see what goes on up here, right? But off the top of my head right now, just not knowing anything more than we see here in front of us right now, I have to be aware of that potential reversal and that breakout going higher, certainly going to be on the S&P, right? Because the S&P is already very bullish. So this pattern, again, remember how it sets up, right? It's a lower low in price, right? We pull back, buyers once, buyers want to buy low, they try again, and we look for that nice red candle closing firmly below the moving average. You guys will learn this in the free trading course. And again, the range below us, right, is the magnet, right? So we kind of know where it's going to go. And then remind me here for a second here, if we were to roll lower, what was the best pattern to short this thing as it goes lower? What's the best pattern to short if as it rotates back and forth? Traps, right? Traps are always going to be your best entry. Now, again, it could be any of these really, but you want to look for trap patterns as we rotate back and forth. So in a nutshell, it's failure patterns around the edges, right? And it's traps as we rotate back and forth, right? It's failures around the edges and then traps as we go. That's the straight line way to make money in a range bound market. Now, one more variation of this. Actually, there are actually a couple of variations of this, but one more I want you to be aware of. We may end up running higher, and there may be so many bears up here, like we saw last night. I unfortunately did not foresee that big shot going lower into the open last night. Anyways, what if it gets whacked back down? If it gets whacked back down, these become V tops. And what we're going to do is run that trend line off the low, bring it up around that high, and then again, start looking left, find those swings, and any of the entry patterns will work on this one. But the key is I like to look for prior swings for traps or failure patterns, right? So if we end up rolling higher and we get whacked right back down, right? We don't go up and get a beautiful crown reversal, right? 2-try failure. We don't get those failure setups off the high like that. No, instead it runs up and gets whacked right back down. What will usually happen on these is we'll start grinding. It'll get whacked back down and grind. And when that happens, it's usually pretty easy. Find that channel off the low, bring it up around that high, right up around that high, and get ready for, it could be a buyer trap, bull trap like this one, buyer failure, a pullback combination, right, as we roll over. And again, targets are the other side of that trading range. Okay, so that's how I want to short this thing if we get this thing running higher here right now. Next thing is, what's a breakout look like? Now, breakouts. I mentioned earlier, we never trust breakouts, right? We always assume breakouts are going to fail. So as we make a run higher, I'm assuming this will fail. I'm assuming after these buyers try a couple times, we can use their stops as fuel. However, if we do see a breakout, and we do pull back to that 21 moving average, and the buyers can hold and jump off of that moving average. This is a telltale sign of a breakout. Now, remember, it doesn't matter how strong that initial leg is. We see a lot of very convincing first legs. But what happens is they pull back, they try a couple times, and they sink right back down into that trading range. So one of the things we're always talking about in our trade room is I don't care. I don't care how strong that first breakout leg is. All that matters is can they hold that pullback? If they can hold that pullback and jump, right, and really get what I call a convincing break off that moving average and through these areas of resistance, now this becomes a breakout. When this happens, now it's pretty simple. Now we go out, we draw a trend line off the highs, we pin it down around those big lows, right? It will usually be that lower level. Obviously, right now I'm kind of brainstorming and kind of game planning right now. We'll know more about this tomorrow in the trade room. But the goal is that if we can get this thing to begin to jump and really, you want this to be very, very convincing. If it pops, holds the pullback and goes, now mark that high. I usually bring down to that major low, mark that low, and then we start looking left and we start finding prior swings. Usually those levels are where the money is made on these breakouts. Now, I'm not going to go over all the specific entry patterns, but it could be a bear trap, it could be a seller failure pattern. One thing that you'll learn to love about breakouts though is if we get a 1, 2, and then 3 breakout pattern, find that new channel off the high, off the low. You know where the market wants to go at that point because the size of the breakout leg, the first leg, is the measuring leg, right? So that first leg, we look for the pullback entry here. That becomes the objective. All right. The middle leg is what I call the oddball leg, right? It's not usually going to be symmetrical. Okay. But as long as you know how big that initial leg is, that will tell you, right, where to put your final targets. You know, one of the things I'm always telling my students, if you want to make more money, don't trade more often. Okay, trade a bigger size and get better at holding your trades a lot longer. Knowing where these breakouts are most likely to go will give you patience, discipline, and confidence to leave a little piece of that, right, to run there into tomorrow. All right. Another variation of a breakout pattern is what we call a pop and grind breakout. Pop and grinds are one of my favorites. If this was to, for example, pop up and then we don't get a pullback and a jump, it kind of pops up and begins to grind, hence the name pop and grind. This would be more of a squeeze play, right? Again, we get that big move down on the 60-minute on the Nasdaq. So if we were to pop up and grind, this is a dead giveaway now that a pullback will likely be bought up and retested. The key now is draw that trend line correctly. Draw it right off those highs, bring it down to those big lows, right? And again, I'm going to go out, start marking swings, and look for ways to take, as we always say, the first test, right? First test is the best test. Does that make sense why that's the first test of that channel, right? Because you're literally drawing it off the high, and then you're bringing it down off that big low. That's the first time we pull back to it, okay? Those are very, very high percentage trades. And remember, the giveaway is the grind. Right? Doesn't matter how strong that first leg is. And like before, the first leg, right? That first leg is the measuring leg. So once you know how big that leg is, we then, we wait and see how deep the pullback is. Once we know how deep the pullback is, then we can measure from there. And that gives us a pretty good idea of where some runner targets will be, right? Half off, retest the high, right? Quarter off, right? At levels of resistance, and leave that final quarter for that runner up to that measured move. All right, guys? This is also game planning on the S&P as well, right? Because again, the S&P is still pretty bullish, right? So it may easily start to keep going here, and if it keeps going, right? Same idea. Right? Same idea. We go up, we're overall bull market. So 1, 2, trap and back down. Right? Again, roll lower, look for those. Right? Look for those trap entries on the way down. This is the same thing we saw about on the Nasdaq. Can they pop up, hold, and go? Right? So same idea. Pop and grind. 1, 2, 3 breakout. Okay. So just be aware of that for tomorrow. Now the question is, what happens overnight? Right? What happens overnight? Now we wait and see what we get here the next few hours. Don't forget, it is earnings season. We got ECB tomorrow morning, durable goods, and GDP before the opening bell tomorrow. It's going to be a busy reaction Thursday, and that's exactly why our trade room is such an important part of learning and trading each day. Tomorrow morning, we're going to get together and trade this stuff together. We've game planned. We put the plan together tonight. Tomorrow, though, we'll trade no matter what the market throws at us here tomorrow. Don't forget, I'll put all the important links. I'll put the membership links for the trade room. I'll put all the free video class links down in the description of the video here tonight. So grab those if you need them. If you need help, any questions or any help getting access to anything we've talked about tonight, definitely don't be a stranger. Megan and I are always here to answer the phone, answer your questions. We got live chat as well. So definitely don't be a stranger. If you need help, we're here to help. We're only a phone call or a live chat message away from helping you guys. Hope you learned a lot in the video here tonight. Tomorrow should be another great day tomorrow in our morning trade room. In the meantime, get some rest tonight. It's been a busy week, and we'll see you guys tomorrow morning, 8 o'clock Eastern time. If not, we're going to come back tomorrow night and get ready for finally Friday, the last Friday of the month of July. We got some more big news coming out on Friday. We'll talk about that tomorrow night. So be there or be square. As always, guys, thank you so much for tuning in. Be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye-bye for now.